We welcome you all to today's edition of Money Moves. I am Melissa Inokera, the FMDQ studios in Lagos.
And I am Grace Agbarago. It's Thursday, the 29th of January. We thank you for joining us at this time on the show.
All right, let us tee off with your news now. African Export-Import Bank, alongside other mandated lead arrangers, has successfully closed a $1.75 billion syndicated receivables purchase facility for Sonangol, Angola's national oil company, to support its operating and capital expenditure requirements. Afreximbank played a catalytic role in structuring and syndicating the deal using an innovative de-risk structure that mitigates oil price volatility and strengthens export-linked trade flows, supporting Angola's energy sector, industrialization agenda, and Africa's participation in global trade. In central banking news, South Africa's Reserve Bank has kept its key interest rate unchanged at 6.75%, saying it wants to see inflation expectations ease further. The bank also flagged potential price pressures, including electricity tariffs, as a key consideration. Let's hear more from Central Bank Governor Leseja Kayingo as he briefs the press.
South Africa, growth looks steadier. The economy has expanded for 4 consecutive quarters, and the available data suggests it grew further in the most recent quarter. This would mark the longest unbroken growth phase since 2018. The main growth driver has been household consumption, which is up by more than 3% last year, compared to an estimated 1.3% for the overall economy. Unfortunately, investment has been weak, contracting during the first half of 2025. However, the third quarter data showed a rebound. We hope this investment recovery will be sustained, allowing the economy to achieve structurally higher growth. Our forecasts continue to show growth moving somewhat higher, approaching 2% over the medium term. We see some upside risks to these projections. Moving to prices, inflation last year was 3.2%, close to our 3% objective. It was a bit higher towards the end of the year, mainly because of temporary factors. The December print came in at 3.6%. However, we expect this was the peak and that inflation will slow from here. Indeed, over near-term inflation forecast has fallen, with the rand stronger and a lower oil price assumption. We are, however, keeping an eye on food inflation, especially meat prices, which are being affected by a serious outbreak of foot-and-mouth disease.
Meanwhile, the National Bank of Ethiopia has launched an automated interbank foreign exchange market, enabling real-time currency trading between commercial banks. Operated by the Ethiopian Securities Exchange, the platform replaces central bank allocations and bilateral negotiations, improving transparency, price discovery, and liquidity, while providing a reliable benchmark for foreign exchange rates. In Uganda, the Bank of Uganda has approved the transition of Finance Trust Bank Limited from a Tier 1 commercial bank to a Tier 2 credit institution effective April 1, 2026, following a strategic shift to refocus on its core customer base. The bank has been granted a 3-month transition period from January 1 to March 31, 2026 to phase out products and operations requiring a Tier 1 license while remaining compliant with minimum capital requirements. In Nigeria, PwC Nigeria today hosted an executive roundtable on Nigeria's 2026 budget and economic outlook alongside the launch of PwC's 29th Annual Global CEO Survey, Nigerian Perspective. The session brings together business leaders to examine key economic signals, risks, and how CEOs are positioning their organizations for growth amid ongoing uncertainty. Here are excerpts.
Inflation has fallen to 14.45%. As a data point, 2 years ago, about a year ago, we were designated as a hyperinflationary environment by the IMF. 18 months later, inflation is 14.45%. It's something to be celebrated at. The Naira has strengthened to 1,436 Naira per dollar. And FX reserves have risen to over $45 billion, providing a much-needed buffer against external shocks. Nigeria is standing on solid ground, or seems to be standing on solid ground, even against a backdrop of subdued growth and uncertainty at home and globally. Our 2026 economic outlook reflects the fruits of disciplined monetary policy, a level of stability many once thought was impossible or elusive. But we're not out of the woods yet. Stability isn't victory. It is a platform on which we must build hope, confidence, and sustainable growth. All the things we as leaders must nurture to make sure Nigeria's ambition is kept alive. The findings from our 29th Global CEO Survey, Nigeria Perspective, reveal a striking shift in Nigeria's business cycle. For the first time in years, optimism is surging. 90% of CEOs expect Nigeria's economy to improve over the next 12 months, up from 64% just last year. Even more telling, 56% are very or extremely confident about revenue growth over the next 12 months, compared with just 30%.
In other news, the Bank of Ghana has set a minimum capital requirement of 100 million Ghana cedis for new microfinance banks to operate, aiming to strengthen financial stability and support MSMEs and individual clients. Existing savings and loans companies, finance houses, and microcredit companies must meet the new capital threshold by December 31, 2026, with transitioning institutions eligible for a 50 million Ghana cedis minimum. The guidelines include options such as relicensing, mergers, asset transfers, or voluntary exit, and introduce shareholding limits to improve corporate governance and expand access to formal financial services. In Kenya, Stanbic Bank Kenya explores how Kenya and Africa are navigating economic change, examining inflation trends, GDP growth, currency stability, and the implications for investors and businesses. Here are excerpts.
A bit of a risk in as far as, your classic asset liability management is concerned. I mean, if you think about it, all of Kenya's exports, are largely dollar, euro denominated. But here you are picking up a bit of liabilities in the RMB perspective. But don't forget that China itself is trying to open up its markets to as much African exports as possible. So you will see that over the medium term, exports to that part of the world, will continue to grow. And in a way that should take out the mismatch that we see today, because again, when you look at the debt profile, it's long term. So in the short term, there might be some risks, and I'm sure there is, various tools that are available to the central bank to try and manage that risk. We do provide some of those. But in the long to medium term, we should also see a shift in the composition of those exports as China opens up, and that should provide a natural hedge to some of the liabilities that we're taking on.
Finally, on News Now for today, Morocco is set to begin operations at its second Mediterranean deepwater port, Nada West Med, in the fourth quarter of 2026, aiming to replicate the success of Tanja Med, Africa's largest port. The $5.6 billion facility will open with an annual capacity of 5 million containers, expandable to 12 million. The port features 5.4 kilometers of breakwaters, 4 kilometers of quays, 4 power stations, and will host Morocco's first liquefied natural gas terminal with 5 billion cubic meters capacity alongside a hydrocarbons terminal. It provides 700 hectares for industrial and logistics use, which has attracted 20 billion dirhams in private investment. I am Melissa Enoch, and that's it for News Now this Thursday. The show returns shortly with Grace at the FMDQ Archives Room, giving us our market rounds.
One thing I loved about the report and the issues that it highlights is it really shows how the importance of technology, the digital transformation, particularly with regard to financial inclusion that has taken place in the region over the years. I think, honestly, of course, I'm biased, I'm talking my book, but really difficult to think of a region that has been impacted as much by digital transformation as Sub-Saharan Africa has. Particularly in the area of digital finance, leapfrogging we've seen in action. I remember I was based in the mid 2005-6 in East Africa in Kampala, and I remember when M-Pesa was just being rolled out in Kenya, and there came a point when, I don't know, about 10 years ago when I was in Nairobi, wanted to make a payment and I couldn't because I didn't have an M-Pesa account. I had to scramble to exchange dollars for shillings to be able to make payments. And this was not quite, it's outside Nairobi. So the penetration of digital finance, technology use at all aspects of life is really just incredible. It has allowed leapfrogging, it has allowed it has had an impact on social life, political life, way more, including the dissemination of information.
Welcome back to Money Moves. Let's now go over to Grace for updates on how the markets traded today. Hello there again, Grace.
Thank you, Melissa. Let's take a look at how the markets ended trading today. Starting off with the equities, the Nigerian Stock Exchange edged up 0.22%, while the BROVM gained 0.98% to 362.67. The Nairobi Securities Exchange fell 0.34%. In South Africa, the Johannesburg Stock Exchange rose 0.53%, and in North Africa, EGX 30 was closed for Revolution Day on January 25th, while Morocco's MASI advanced 0.24%. Let's do a quick round on some of the Pan-African currencies. The rand strengthened 0.26% to 15.73 against the US dollar. The Egyptian pound was nearly flat at 46.82, while the CFA franc rose 0.21% to 548.97. The Kenyan shilling dipped 0.02%, the Moroccan dirham eased 0.07%, while the naira weakened 0.58% to 1,385 naira 43 kobo as at 13:29 GMT. Let's switch into the commodities data deck, beginning with energy prices. Brent crude climbed 2.78% to $70.30, while US WTI jumped 2.85% to $65.01. Natural gas rose 4.37% to $3.89, and Arabian gasoline gained 1.56% to $1.92 as at 13:23 GMT. Now, finally, two metals prices. Gold surged 3.89% to $5,510. Copper gained 7.81% to $6.38, and platinum increased 5.18%. Aluminium rose 2.74%, while iron ore eased 0.17% to $105.85 as at 13:25 GMT. And that's our Money Moves markets today. Back to you, Melissa.
Grace, thank you very much for those updates on how the markets wrapped up today. And that's it on today's edition of Money Moves. From all of us here at the FMDQ studios, we say thank you very much for watching and bye for now.